If you're struggling with money like the majority of Americans, this will be the most valuable video that you watch. Say you're a husband and wife making $75,000 a year, which is the median annual household income in America. After taxes, you're going to be left with $60,000 or $5,000 a month, and then you got to pay your expenses. For the average couple, that means that you're spending around $2,000 for all of your housing costs. That includes your rent or your mortgage, plus your insurance, plus your property taxes, plus your utilities, plus everything else associated with the maintenance to keep up your home. Then another $1,000 on your transportation. There might be a car payment or two, your insurance, your gas, your maintenance. Then $500 on your health. That might be your gym membership, plus your health insurance, $500 for your groceries, you got to eat, $500 for entertainment, eating at restaurants, going to movies, having fun, and then another $500 on miscellaneous stuff. If you buy alcohol, if you smoke, if you do anything outside of up here, buy clothes, buy furniture, all that fits within this $500 a month, which means you are left with nothing every single month. By the way, I forgot to say this, in my native language Punjabi, we call a mustache a much, and a braid a gut. But then what ends up happening to the majority of Americans is something comes up that you want to buy. Maybe it's a trip to Cancun, maybe it's some new Gucci, maybe it's a new puppy. And this thing costs $2,000, but it doesn't fit within your budget. So what do? You have option A, which is work to save up that $2,000, or you have option B, which is buy it anyways. Now, I'm not here to talk theory. Let's take a look at the numbers. A record number of Americans are in credit card debt, which means we have a lot of people that are saying, you know what, I'm just gonna buy that puppy anyways. This is still not the craziest part. The craziest part is that society will tell you that it is okay for you to go into debt, to buy that puppy, to buy that vacation, to buy that Gucci, because everybody's doing it. But I'm not most people. I'm not here to make friends. I'm here to help you be better with money. And this advice is screwing you. It's screwing your kids. It's screwing your spouse. It's screwing your grandkids. And it's also screwing your community. And that advice is also making somebody else rich. What happens is the first time you spend money that you don't have, banks are going to be very happy to give you this first time loan, and maybe they'll only charge you 8% interest to pay it back. But the problem with this type of overspending is that it's kind of like eating flaming hot Cheetos. You think and you tell yourself that you're only going to eat one Cheeto, and you eat one, and next thing you know, your hands are covered in that red powder. So now you've been living this overspending lifestyle, and then what ends up happening is that puppy that you purchased, who you named Cheetos, ends up getting sick. And so you take poor little Cheetos to the veterinarian, and the vet says that, oh, Cheetos is sick, and he needs an operation. It's going to cost $2,000 to save little Cheetos. But you don't have $2,000. You would put it on your credit card, but now you've maxed out your credit cards. So now what do? Now you get a little desperate. You need $2,000 to save poor little Cheetos, and now you go online and you find this thing called Care Credit. And they have all these happy pictures of couples with their puppies and people smiling, and they tell you that you can get the care you need today and pay for it later. The only problem is that you're going to be stuck paying 32% interest. But who cares? You got to save Cheetos, right? Everybody knows that 32% interest is expensive. But I don't think you really understand how expensive it really is. So let me show you. Let's assume now, instead of you paying this 32% APR, you could get 32% interest on your investment. Let's see how wealthy you would become. If you could invest just $100 a month, and you start this when you're 21 years old, and you do this until you're 66, you get a 32% return on your money. Well, now you're not going to retire with $1 million, or $10 million, or $100 million, or $500,000. You would have more than $1 billion in your account because you're investing this $100 a month and getting a 32% return. But you're the person that's paying that because poor little Cheetos got sick. Now I know I'm being silly with this whole Cheetos example, but the reality is it doesn't have to be your dog getting sick. The reality is this is what you're paying to your credit card company. This is what you're paying to your payday loan company. This is what you're paying to your subprime auto loan company. This is what you're paying to your buy now, pay later company when you don't pay things off in time. This is what you're paying, making somebody else rich at your expense. You stay poor, they get rich. Now think through this. What ends up happening to that person in this situation? You're mad at your dog, Cheetos, for getting sick. You're mad at the veterinarian for charging money to fix your dog. You're mad at your landlord for raising your rent. You're mad at Walmart because they're getting expensive like Whole Foods. You're mad at everybody. You're mad at your boss because you're not making enough money. You hate the system. You hate everything, and you can't figure out why you can't get out of this mess. But it didn't start with Cheetos. It started with that example that we had before. It started with A, do you start saving up now? Or do you just say, hey, I'll buy it anyways? By the way, if you felt anything like this before, it's not just you. The majority of America is in a similar financial situation right now. But it doesn't have to be that way, and I'm gonna show you how you can get unstuck. And the way we're gonna do this is by doing two things. First, you gotta understand how money works. You gotta learn money. Number two is you gotta then build a plan to get out of this mess. We're going to do this today. But first things first, I want to remind you that on August 15th, 1971, the United States dollar was taken off of the gold standard. And because of that, this year, 2024, 53 years later, I'm hosting a live investor summit on August 14th and 15th, where I'm going to be going over two things. Number one, how our money has changed, not just over the last 5 decades, but over the last 5 years. And then number two, how you can find new wealth building opportunities in today's economy during a time where inflation is still hot, during a time where interest rates are still high, during a time where now our economy is slowing. How can you find wealth building opportunities? I'll be going over all of that on this Investor Summit. It's completely free, it's live, and it's virtual. So if you'd like to join me, all you have to do is register. There's a limited number of people that can join me live. So if you'd like to join, all you got to do is register using the link down in the description below. The first thing is you have to build an understanding of how our money flows through our economic system, because we have 3 different types of entities in our economic system. We have consumers, investors, and entrepreneurs. Some people become investors and entrepreneurs, but every single person, rich people, middle class people, and poor people, every single person is a consumer, because everybody needs to eat, everybody needs clothes on their back, and everybody who has a dog needs medical care. So if you are a consumer, which everybody is, you are going to spend money at a business. This might be for food, this might be for a car, this might be for anything that you want to buy. You're spending money at a business. Well, when you spend money at this business, the person who this also benefits is the investor. The investor is the person that owns a piece of that business. This is what everybody should strive to become, but I'm going to show you why. Now, what ends up happening in our economic system is inflation. Inflation has been going on for a long time. This didn't just start after the pandemic. Inflation has been happening for many decades, and it really started to accelerate after 1971, because that was when the dollar was taken off of the gold standard, which gave the government and the Federal Reserve Bank, which is our central bank here in the United States, the ability to A, spend more money, and B, print more money. Because now our money, or at least what we call money, became just a currency. It's a piece of paper that the government has the ability to spend, even if we don't have that wealth. And what that does is it ends up devaluing the currency. So now the Federal Reserve Bank, the central bank, can just print essentially unlimited amounts of money. They give that to the government spends the money. Now, if there's more and more money being created, what ends up happening to the value of your dollars? Well, they go down. That's why $100 today can't buy you what $100 could 30 years ago. It can't buy you what $100 could 10 years ago, and it can't even buy you what $100 could last year. It's because our value of our dollars is dropping because of this inflation. So when you have this inflation, which we've seen for a long time now, and is going to continue to happen, who does that hurt? Well, inflation hurts consumers, because that means now when you want to consume anything, you want to buy anything, you want to really purchase anything, you have to spend more money at these businesses. Who does that benefit? Well, that means more dollars are flowing into the hands of the investors. Inflation disproportionately hurts consumers, while it disproportionately benefits the investors. This is why it is so important for you to start investing your money, because the reality is if you're relying on your savings and your earnings, well, your savings are being inflated away. If you had $1,000 in the bank for the last 30 years, that $1,000 will buy you a whole lot less now than what it could have 30 years ago. So we know that inflation decreases the value of your savings, but it's also hurting your spending power based off of your income, because salaries have not kept up with inflation. As much as people want to hope they have, they haven't. And so because of that, it is so important. If you want to build wealth in this economic system, you have to understand that our system is designed to produce inflation. And inflation benefits the investor while hurting the consumer, which is why if you want to become wealthy, you can't just be a consumer, you have to become an investor. Which brings us now to number 2. Well, how do you build a system to do this? Because if you're already struggling with money, how do you suddenly find more money to invest? So let me wipe this off. Let's go over number 2. Now, when it comes to you building a plan of how do you actually break out of the system, the first thing you got to do is get out of what I call the financial danger zone. And what that means is if you do not have $2,000 saved up to protect you against an emergency, this is not $2,000 saved up to buy a car or a home, $2,000 put away to protect you against something bad happening. and paying off your credit card debt. If you have any sort of high interest debt, whether it's credit card debt, whether it's payday loans, whether it's those other high interest types of debts, you are in what I call the financial danger zone. And in this time, you have to get extremely serious about doing anything possible to find that money to save your first $2,000 and pay down your high interest debts. That's the very first thing you got to do. That means during this time, no Netflix, no vacations, no restaurants, no spending money on anything unless you need it to survive because you are in that financial danger zone. One small thing bad happens and you can go deep into a financial hole that will take you years to get out of. So to avoid that mess, what you're going to do right now is you're going to get extremely serious, which is hard, and you're going to have to find a way to save $2,000, pay off this debt as fast as possible. Maybe that means you got to sell your car. Maybe that means you got to downsize your home. Maybe that means you got to live a whole lot smaller and make a whole lot of sacrifices for a little while that we can get out of this financial danger zone. There's really no ifs, ands, or